But when you look at it, there's also a sign that perhaps there's a bit of nuance in chips. And right now what we're seeing, at least, is that the memory chips seem to be outperforming the broader chips at the moment. Is this a fair assertion of what's going on right now? Is this the direction markets, or at least momentum, is going towards outsized favor for these memory chips that might be more susceptible to the shortages that they're highlighting as compared to some of their counterparts, say in Taiwan or in the other parts of the chip space right now?
Yeah, that's absolutely right. So high bandwidth memory is 4 times more intensive in terms of usage for wafers than normal DRAM. And I think this is harder than a ticket to BTS concert right now, these DRAM manufacturers. So, and HBM is what's really driving this. And there's only 2 or 3 producers in the world that have that supply. And every hyperscaler is trying to sign multi-year contracts with these suppliers. So it's all about huge demand and supplying being constrained. And then we have to think, what's the length of the cycle? So right now we see a lot of capacity will not come on probably till late 28, mid 28. So it really depends on, until then, the length of the AI CapEx cycle and how much it's upgraded.
Yeah, and again, perhaps the markets are being upbeat because of the shortage right now and the pricing power that some of these chip makers have at the moment. But a shortage, if it's prolonged, could become painful. When does a shortage perhaps become less of a boost for the markets and these particular offers and starts to weigh on their share price and perhaps becomes more of an alarm rather than that of, say, hey, you know what, these guys can price whatever they want and this is just going to benefit their margins? When does this become a pain point?
Yeah, that's the trillion-dollar question. This is a cyclical industry. I've lived through huge downturns. So these stocks, some of them trade on 7 or 8 times earnings. They look optically cheap, but they're also on 3, 6 times book value. So it's really about what's peak earnings. And peak earnings could be 27, 28, and it's all about that trajectory. What's related to that, what's the ROI on AI? And that's what's ultimately going to drive the CapEx, and then will ultimately drive the performance of these shares. And then finally, of course, it's easier just to buy these because they're the building block of AI than trying to pick which hyperscaler is going to win the LLM model race. So they're in the sweet spot right now, but buyer beware, you have to watch the cycle. They're still cyclical.
Fair enough.
Yeah, and Prashant, I want to talk about volume and, without getting into specifically about the memory sector at the moment, what about the weighting of South Korea's benchmark index of the KOSPI, the weighting that it has in MSCI Emerging Market Index that has been increased this month. And then there is some chatter around how it can be actually discussed as a serious candidate for developed market participant as well of MSCI Index. Is that part of one of the forces that is actually pushing the KOSPI even higher at this point?
It's certainly helping. I mean, if you think about the concentration we're seeing, it's 2 stocks in the Korean index, more than 50% of the index. So that's pretty incredible. And really, if you think about Korea itself, yes, it's a developed economy. So it does make sense at some point they could graduate to a developed economy status. It's also about demand for these shares offshore. Because fund managers are also chasing the AI trends, and they're buying the foundation of AI in terms of these companies. So it's a combination of trends that are doing it. Plus, finally, Korean domestic investors are also very, very large participants in the trade as well, which really probably nothing to do with developing versus developed status, but really all about momentum. And this is a momentum market.